Okay, good morning everyone. It's Tuesday the 27th of September. Yesterday the Ftse had a very strong down day, came all the way down into these sort of 800 levels. As per the Sunday analysis, there are going to be stops sitting below this candle right here as people have traded this market back up. Swing traders moving their stops up as each day completes. There'll be stops under here. The market has came down, cleared those stops out. In overnight trading, it has rocketed all the way back up again, and we are sitting toward yesterday's high. Now, key things for me today is after such a strong down day, first of all, breaks above this level right here are very bullish. Above that level, we will very likely see 6, 9, 10, and more than likely either, well, most likely not today actually, over the next couple of days, the Ftse will come up towards R2. Above R2, we now have a triple top, which means the market has came down here, cleared out stops. There are going to be lots of stops up here now. Above R2, above this sort of 6,955 level, and the market is very likely coming up to take out all the stops that are going to be sitting up here also. It's the very common way for the market to move. Comes down, clears stops before stopping on a dime, reversing and coming back up, taking out the stops to the other side. That's why it's very important that your stops when you're trading are never in very obvious places. A lot of people they seem to think that when they get stopped out like this, and then the market, let's say the market does now reverse and come all the way up and starts to make a very bullish run, lots of people will turn around and say, oh, the brokers, they knew where my stop was, or the market makers, they knew where my stop was, they came down, they hunted my stop, everything is fixed. That's how the markets move. They will take out your stops. It's no conspiracy theory. You're just putting your stop in too obvious a place, unfortunately. Now, for me today, let's go on to the 5-minute time frame. Okay, so this is the key area today for me, which I want to watch. See how the market reacts up here. And if we do start to break above here and come back, very nice for buy positions. Early morning, I want to see the reactions. I would be willing to take a sell position as long as we remain under these levels also. Then up towards R2. This is the key zone with the triple top now. Down below, really, S1 and S2 today, these zones that I have created are very strong also, and I'd be willing to watch those, as well as 618 to 684. Something to go over also, when I'm taking into account these zones, when I first look at the market each morning, I do a market analysis. I go over what the market has done recently, what it is likely to do in the future, the short-term future, and the medium-term future also. I'm quite good at this. I've become quite adept at it, and I can usually tell where the market is going to go. Now, however, if I am incorrect at any point, it does not matter. A lot of people seem to think that trading is some sort of prediction business where you have to predict where the market's going. You have to be able to tell every single day what price action is going to do. That's not trading. Trading is having a trading plan which is capable of working in the vast majority or all market conditions, leaving you profitable overall. And trading is basically executing that plan flawlessly. That is what trading is. It is not a predictive industry. You don't need to predict what the market is going to do every single day. If I am in any way wrong on any day, it does not matter to me. The most important thing is if I do analysis and the market begins to show me that I'm incorrect, I am able to admit that I'm wrong, completely disregard the analysis, and just continue to focus on the trading plan. With the trading plan I use, which is zone trader methods, that trading plan, is very, very high probability. It's designed, it took me thousands of hours to perfect and design the zone trader methods. I still work on them to this day. I'm still looking for ways to improve, ways to adapt. But that is what being a trader is. For me, being a trader is following those rules that I know work. They work consistently. They are very, very high probability. The analysis that I do, it's the main reason for it is, well, first of all, I think it's good to be able to read a market. And if you can read a market, if you can see where the key areas are, then you have an idea of where the market is likely to head. It can give you targets. So for example, above here, if we get above here and I see buy positions, I know that 6, 9, 10 would be a good target, with a longer term target up towards R2, because it is the triple top. And it's very likely if we get above here now, the market is heading up here for at least a test, but more likely to clear out stops at a minimum. So that is what I'm watching today, guys. The zones are there, as always. The zones are there every morning for me. That's what I trade off of. So let's come back at the end of the trading day. We'll go over what happened. Zone traders, I'll take you through the potential trades for the day. And we will also see the potentials for the market moving forward after we see what happens today. Okay, so early morning trade has been triggered. Right here, 8 a.m. candle. Basically, the market's pushed up, bounced, pushed up, bounced, pushed up, bounced again. Then the signal comes at 8 a.m. For the sell position. So I'm just watching this trade now. We do have the pivot here, which is going to be support. So I'm just looking at this as a nice early morning trade. Hopefully get down to those levels where I will look to exit upon reactions. If that happens, sort of 10 to 12 points I really want to see, unless we start to bounce as soon as we touch this level. I'm just going to watch the market, see how it reacts. If it gets down there, we exit the trade. We're finished nice and early in the morning. Nice clear signal to sell at 8 a.m. and work day done for the Tuesday. Okay, so we're getting down towards the pivot now. Likely going to exit down there at 6844. Subscribers, hopefully you have spotted one of the main reasons why I'm coming out of this trade. Down there we have clear signs that this market is, or has the potential to make a bullish run. So, first target, absolutely fine for exiting for me on the back of that. Just watching now, we are down toward the pivot. You can see the market just starting to bounce now. Just watching. Okay, and there you go. So, target reached. As mentioned, subscribers, hopefully you spotted one of the main reasons for coming out of that trade. There's no reason to say it's not going to come all the way down to these levels here before we see a bullish run, but I am now expecting a bullish run back up into at least sort of the 6862 levels. So 10 past 8, done for the day today, guys. You know, this is the sort of days that I live for when trading. When they come in, you want to jump on top of it. You know, there's not many industries where you can be finished after working for 10 minutes. Analysis this morning, looking for sells at this level, but the key thing for me, on top of those sells, on top of that analysis, is that the zone trader methods which I trade produced the sell position, which was the confirmation. You know, my analysis did not need to be there. I already had the zone. It was the zone trader alert or signal that got me into the market. It was the next zone that was the target, and it was a good place to exit. Okay, guys, so come back now at 4:30, and I will go over the market, go through the other trades that triggered zone traders, the ones that you should have taken, the ones that you should have avoided, and we'll see what the market does for the rest of the trading day. Okay, we're at 10 to 5 and the Ftse is now closed. So on the daily time frame, we can see that the overnight bullish run-up has all came off of the Ftse, and price action on the daily time frame has closed as a doji candle. The sell-off came from the key zone that we identified this morning. If we go on to the 5-minute time frame, we can have a look. Early morning, basically, I was watching up here. I wanted to see if the market could remain below here or if it could break above here. And that would give the sentiment for the morning session, basically. We bounced once, twice, 3 times off of the 6869 level. We then get our ATM pin bar. The market comes down very quickly into the pivot zone. For me, I exited here. I expected the market to retrace somewhat. It didn't actually come in. The market just crashed through, almost reached the zone down here, did a very slight retrace, and then smashed through with basically no support at all. So, you know, we're getting the clues here that the market is very weak. You've got the huge sell here. You're coming straight through this zone with very little support at all. Once we break the zone, we come back up. We get a pin bar at 1020. The market then comes up again. You're getting your confirmation or an entry candle at 11:45. The market then spikes up quite powerfully. You get a position here, which I wouldn't have taken. I would prefer to wait for this one right here. Entry here. Where's your target going to be? Your target is the next zone. Management point is going to be where? The lows produced right here. The market then comes down. It bounces all the way back up again. You get a position right here at 330, sell position. Where are you going to be watching on this trade for signs to get out? Well, we're looking for clues. We're seeing a rectangle of stalled price action right here, confirmed by this candle right here, which is a spike up, which then fails. It's telling us that both bulls and bears were fighting at these levels. If we mark them in and go across, what can we see? The market comes down, reacts off of this level, and then bounces up. Also, what we can see, let me just delete this arrow. The market has came down here, broken through. 1, 2, 3. This is a shoulder, a head, and a shoulder, which then brought on the bullish surge that we've seen right here into the close. Okay, sorry, I paused that video there. I just wanted to reply to the email that came in. Okay, so looking at today's price action, what can we see? Well, first of all, the zones reacted very, very nicely. You know, if you've been following these videos for any portion of time, you see this happens over and over and over again. Very high probability methods. The reason for that is very simple. When I first started to design and implement zone trader methods, I went back to basics. I started doing everything myself after effectively wasting lots of time and thousands of pounds on so-called professional trading courses. When you start to look at trading in the form of not so much what retail traders are doing, for me, I just completely ignored everything that I'd been learning, everything that I've been seeing in regards to retail traders. I looked at what professional traders do, and that can also include people like floor traders. Floor traders, especially for things like indexes, they have a very, very strong influence on these markets. It's only when I started doing things like that that zone trader started to come about. So when I started to get all the key levels, figure out the things that were used the most, and develop these zones. I've never seen anybody up until I started doing this trading in this way. Now there is. Now I see different people using these methods. Lots of zone traders out there, which I'm very, very happy about. But trading is not, as I mentioned this morning, it's not about prediction. There's no. You don't need to be able to predict what the market's going to do. And more than that, you don't need to be some maths genius. You don't need to be some PhD theoretical physics master. It's just not the case. What you tend to find is that side of things is, for some reason, it's promoted by a certain segment of traders themselves. So they try and show trading as this very, very difficult, very complex thing. They have indicators. There are a couple of indicators on this screen, a couple of moving averages, and then when you start to add in the rectangles, the coloured lines, you've got the candles. It can look complicated to a beginner. And for some reason, I tend to find there's a huge portion of traders out there who play on that and try and make it, with technical jargon and stuff also, sound much more complicated. As traders, all we are doing is, well, first of all, we need a robust trading plan. There's lots of traders out there who have trading plans that, are specifically for trending markets or specifically for ranging markets. In my opinion, your trading plan should work across all market types. All we do is we have a robust trading plan, and as a trader, our job is to follow that trading plan, to implement the trading plan. You don't want to make mistakes. You don't want to let your emotions get in the way of your trading. You don't want to start taking revenge trades. You don't want to start taking unnecessary losses because you're bored. You don't want to jump into moves too early, jump out of moves too early because you're panicking. As a trader, that's all you have to do. And the difficult thing as a beginner is you have to learn how to do that. So you have to have, you can develop your own trading methods if that's the route you want to take, or you can get a professional trading course, professional methods that have already been designed for you. As long as you've done your research and you're happy with what you're getting into, you're happy that what you're learning works, that's absolutely fine. Also, as a beginner, you then have to start to take the journey of learning. First of all, you're going to have to learn the methods. That's not easy because there's always variables. And when you start to do something, it's like driving a car. You can know everything about driving a car. I can tell you exactly how to drive a car. But if you've never driven a car before, when you jump in that car, you are going to make mistakes. You're going to stall the car. You're maybe going to forget to indicate. You're going to pull out on a car that was in your blind spot. You're going to do all those sorts of things. It's because, until you start to train your mental muscle memory, it's not there. You can't be expected to do everything perfectly. Once you start to learn the methods, after that, you want to start to become disciplined. You want to start only trading the trades that fit with your trading plan. And again, that's going to take you time as a beginner. It's unfortunate, but that's just the way it is. It takes time to get to that level. Months, you've got to think, maybe a year, 2 years, 3 years. I get contacted sometimes by people who've been trading for 7, 8, 9 years, and they're not consistent. Now, I should point out, I'm not saying anything negative towards these people. It's just everybody works at a different pace. It's a difficult industry to master. You have to be willing to work very hard at it, and you also have to be willing to admit your mistakes, correct your mistakes, and focus on improving yourself every day, every trading day. And that, for me, that's what makes a trader. That's what makes a successful trader. And there's no gimmicks. You don't need to know all the technical jargon. You don't need to know every single candlestick setup that's ever been written. You don't need to know the difference between Bollinger Bands, moving averages, stochastics, whatever it may be. All you have to do is find a robust trading plan, implement that trading plan, and then start to develop yourself as a disciplined trader. Okay, guys, so coming into the end of this week, I'm also going to be adding in Australian dollar, US dollar reviews, and that's because these are getting added to the subscription service that I do. And lots of people who take the Zone Trader course, they want to be able to trade out with Ftse trading hours. Australian dollar, US dollar is a forex pair, so that allows them to do that. They can trade the US session if they want, and that market will still be relatively volatile and liquid. So basically, once a week there'll be Australian dollar, US dollar reviews, and also at the weekend there will be the summary and analysis, exactly the same as is done on the Ftse. Okay, guys, so hopefully that was all helpful, and I hope you all have a great rest of your trading week.